Among Kamala Harris's proposals, there is one that is completely unprecedented, something that is completely new in American history, something that has never been proposed before. Stick around to the end, and we're going to talk about that here today in this video so that you're prepared no matter what happens. Hello everyone, my name is Javier Correa and I'm a Research and Development Associate here at Nomad Capitalist, where we help 7- and 8-figure entrepreneurs go where they're treated best, legally reduce their taxes, and improve their lifestyles overall. And today we're talking about Kamala Harris, Vice President Kamala Harris, presidential candidate Kamala Harris, and specifically some of her major tax proposals that could impact you as a nomad capitalist, as a global investor based in the United States. So let's talk about Kamala Harris's major tax proposals and how they will affect you as a nomad capitalist and a global investor operating from the United States. Well, number one is the corporate income tax rate, which Kamala Harris is proposing to increase from 21% all the way up to 28%. Now, if you recall correctly, 21% is the rate that has been in place since 2017, 2018, when Donald Trump's famous tax reforms came into place. In fact, it is the only provision of the Trump tax reforms that has been made permanent, and now Kamala Harris wants to change it. She wants to take it from 21%. It was originally 35%. Donald Trump got it down to 21%. Now she wants to increase it to 28%. So that is the first major reform that she is planning to introduce. Corporate income taxes go up to 28%. In addition to that, if you're an investor, the net investment income tax for those making over $400,000 a year, she's proposing to take that from 3.8% all the way up to 5%. In addition to that, capital gains, again, if you're an investor and you're a high net worth individual and you have taxable income over $1 million per year, then your long-term capital gains could be increased as well to the rate of 28%. So overall, if you're a business owner, if you're an investor, this might not be ideal for you. Now, in all fairness, Kamala Harris has also mentioned that she does not wish to introduce any tax increases for those making under $400,000 a year. She is talking about an expanded business deduction available for new business owners of $50,000. The current limit, if I'm not mistaken, in the United States is $5,000 per year. Kamala Harris would increase that to $50,000 in order to stimulate and to support new business creation in the United States. So there you have it. That's a major rundown of Kamala Harris's main tax proposals as they would affect you as an investor, as a business owner, as an entrepreneur in the United States. And I want to add one more to that, which is the very controversial unrealized capital gains tax. That is, I believe, the major one, the one that's caught the most headlines, and the one I would like to focus on perhaps for a few seconds, if I may, because it would be unprecedented in American history. You're talking about a presidential candidate that is seriously talking about proposing that capital gains that have not yet been realized, meaning assets that have not been sold. Remember, capital gains derive from the sale of assets, meaning I buy some stock at $100 a share, I sell it at $1,000 per share, I have $900 worth of capital gain per each individual stock. At the moment that I sell the stock, that's when I actually get the realization of the gain, and therefore I trigger a taxable event. Under Kamala Harris's plan, if it were to be approved by Congress, then we would have a situation whereby certain individuals, in this case the ultra wealthy, those worth $100 million or more, would be subject to taxation on capital gains, even if unrealized. If such a proposal were to even be approved by Congress, which is it's already a very difficult task to achieve, then most likely the U.S. Supreme Court would weigh in to assess the constitutionality of such a measure. But what can we see from Kamala Harris's proposal? We're seeing higher taxes on businesses. We're seeing higher taxes on investment-related income, whether it's through the net investment income tax increase or for the increasing long-term capital gains for high-income earners. So overall, if Kamala Harris were to get into the White House starting January 2025, and you are a high-income earner located in the United States, you're an entrepreneur and investor, then from a tax perspective, the U.S. will become less attractive under a potential President Harris. Sure, there are some tax credits and deductions that are being expanded, such as the $50,000 business startup credit. Will that be enough to offset all of these other tax increases? I'm not sure. That's for everyone at home individually to assess. But I do believe that if you're an entrepreneur, if you're an investor that is US based, you should be looking at other options. And this is where a company like Nomad Capitalist can truly help. Because you know what? The United States is not the only country in the world to do business anymore. The United States is a very important country. It is a major market in the world. We do not believe that the United States is going to disappear overnight. It is still very convenient to do business in the United States for several reasons, but it is no longer the only place to do business. You've got Latin America, you've got the UAE, you've got other countries in the Gulf, you've got Southeast Asia, you have to a certain extent Europe also as an option to do business. Obviously, Americans, if you are US citizens, you are going to have to deal with US taxation regardless of where you go. But thus far, Kamala Harris hasn't mentioned anything about taking away the incentives related to Puerto Rico. So for example, relocating to Puerto Rico, becoming a bona fide resident of Puerto Rico, and potentially dramatically lowering your taxes, especially on capital gains. We just talked about how Kamala Harris wants to increase the taxes related to capital gains. If you relocate to Puerto Rico at the right time, you could potentially shield a lot, if not all, of your capital gains from US federal taxation. It's basically the only place in the world where you can really do that, bar from maybe a few other exceptions in other US territories, but Puerto Rico is essentially the big one. No foreign country allows you the same benefit. In addition to that, Puerto Rico still has some incentives related to running a business in Puerto Rico, especially if you're exporting a service. In that case, then potentially you could dramatically lower your corporate income tax rate. And let me tell you, we've got clients that have moved to Puerto Rico, moved their businesses, and if the business qualifies for some special programs in Puerto Rico, you could pay as low as 4 and in some cases even 1% corporate income tax in Puerto Rico. And then guess what? Any dividends you take out of your Puerto Rico company, tax-free. So, this is an alternative to what is going on in the US, especially if you're a US citizen. If Puerto Rico isn't your cup of tea, then going overseas, moving, having a trifecta method where you have multiple homes, that could also help you. Kamala Harris has not mentioned anything about, for example, taking away the foreign earned income exclusion for Americans. So even if Kamala Harris becomes president, it might be still possible, or it'll very likely still be possible, that you'll be able to move overseas and exclude a portion of your income from US income taxation. That is also very interesting. At the moment of filming this video, the foreign earned income exclusion is, I believe, around the value of $126,500 plus the standard deduction. You go over $130,000. So let's just round it up to around $140,000 you can exclude from taxation every year by qualifying for the foreign earned income exclusion. We have a lot of other videos and a lot more content on our website about this if you are more curious. But the point is, if Harris wins, you can still use these techniques to dramatically lower your taxes. If you are a non-resident alien of the United States, so far no major changes for you under the Harris administration. We will look at her proposals more closely to see in the future if anything comes up with regards to non-resident alien investors, but so far so good. If you are a holder of a non-immigrant visa, like you hold an E2 visa, for example, and you've been spending some time in the US under the substantial presence test rules, and that's how you've become a tax resident of the US, you may be interested in potentially looking at some other options that would allow you to relocate to certain countries that have excellent investment and tax treaty relationships with the United States, that would allow you to benefit from preferential taxation rules as a foreigner, and you would be able to essentially get out of the tax net before President Harris comes in with all of these proposals. So obviously, those holding non-immigrant visas who are just tax residents of the US under the substantial presence test rules, you guys have a much easier time exiting and re-entering the system as you wish. US citizens obviously have the system whereby they are taxed regardless of where they live. Green card holders, you have a very similar situation to US citizens. But again, the bottom line here is that there are multiple places you can go. You've got the non-dom regimes in Europe. You've got zero tax or very tax-friendly countries in the Gulf. You've got tax-friendly countries in Latin America and Central America. You've got tax-friendly countries in Southeast Asia. And these are all countries in a location-independent world, in a multipolar world, that would still allow you to do business in the United States, to keep clients in the United States, to travel back and forth to the United States if you needed to for business purposes or even for personal purposes, for pleasure purposes, but that would allow you to operate on a more tax-friendly basis, on a more business-friendly basis as well. So overall, the bottom line here is if Kamala Harris comes in and you're an investor, you're an entrepreneur, it's going to be more difficult to do business from a tax perspective, and having second options, including residence permits, second citizenships, and business structures established overseas will be essential to surf the wave of a potential Harris administration. So with that in mind, and hopefully before the next election, go check out our website, nomadcapitalist.com/apply. Subscribe to this YouTube channel, follow us on Instagram for the latest news, and thank you for watching this video.